Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, Trading with Kev, and we've got an awesome guest with us today. We have one of the co-founders of Market, Jeev. As many of you may know him as Capital Hungry, and we have CPI reports. So we're going to be setting you guys up with some of the best trade setups today. It's going to be fantastic. So guys, make sure you hit that like and subscribe button because we have a great show in store. Jeev, man, thank you so much for being here.
What's going on, Kevin? Thank you for having me, man. We appreciate it.
Absolutely, bro. Absolutely. So CPI is coming out this morning. Let's dive right into it. What are you expecting?
Yeah, I was hoping to see the CPI data come out as we speak, but it looks like even with the U.S. government shutdown coming to an end last night, the data's still slightly delayed. I was just looking at it here in the intro, right? So we were looking for it to get released right now and get some action, but at least we can still prep for it together.
Absolutely, for sure. So let me pull up your screen. If you want to show us, we can do some analysis. We'll cover what market has in store for us, the daily buys, the intraday buys, and everything in between.
Sure. Is it switching? I think it's stuck on.
Yeah, so when you share screen, just make sure you do full screen if you want. That should give you the opportunity to switch between tabs. Guys, good morning, everybody. Throw a good morning in the chat for Jeev. Let's go. Somebody was asking, do you mind just to speak into the mic a little bit? It seems like you might be a little distant.
I think
Beautiful.
let me fix the mic here too. I got it better.
Sure. Let me get your screen going. Wonderful, man. What a beautiful screen.
Okay, so main thing I'm looking at with CPI is obviously the information it's going to give us about forward guidance for rate cut expectations, right? We understand that the market is always forward looking. The greedy crackheads with capital, the market makers that keep pumping their bags in stocks and risky assets, they're always looking for the next shiny thing to give more fuel to the fire to their greed, right? So with this inflation report, if they want to see more stock market bulls, if they want to see more dollar bears, this main year over year data here would need to be showing some level of decline, right? This adds on to further progress with disinflation, and it would lead to more dollar bears, gold bulls, stock market bulls. But the thing we need to be careful about is whenever you look at inflation data and it comes back to historical baseline levels, anywhere from the 1.5% to 3% range, there's always tons of fluctuation, right? The difficult part the central banks have is keeping inflation at their 2% target, which hasn't even been hit yet. Market makers just been going crazy ahead of the curve, thinking it's going to be hit no problem, smooth sailing, soft landing is going to be achieved, right? So what I'm keeping an eye out for is that with the pricing we've been seeing on some of these asset classes, gold just nearing back to its historical high prices, tapping into 4240s. We've had stock markets like SPX just hovering from all-time highs. Dow Jones yesterday just printed a new all-time high. I think it would be very realistic that if inflation is still sticky and troublesome, we could get a slight pushback on rate cut expectations, which would sort of snap a lot of these futures traders back to reality and back to what Jerome Powell said at the last FOMC. At the last FOMC, Powell was pretty clear and direct that they're in no rush to cut rates, right?
Yep.
So I think we can see that once this inflation data comes out, it can be slightly sticky and troublesome. Maybe the yearly going from 3% up to 3.1%, and the monthly staying at 0.3%, which could still lead to a slight pushback on rate cut expectations, some gold profit-taking moves from these prices. Short term, what I like to call data-induced pullbacks. You know those periods of times where you have a very bullish trend on an asset class, but a certain economic data report or a certain news headline just acts as a catalyst for retracement and correction, right? I wouldn't mind seeing gold come back down into the 4170s again.
4170. Nice. Yeah, great area.
4170s, even into the 4100s again. These demand zones, very nice bullish support levels. I wouldn't mind getting some short-term retests into these areas before creating a higher low and much higher probability continued dip buying opportunities. Because when you look at market, and for me onboarding, I'm always focused on gold. I know you trade gold futures, correct?
Yes,
GC?
sir.
Yeah,
Yep.
yeah. I'm usually on the CFDs, XAU, USD, right?
Okay.
So just loading it up here.
Yeah. Yeah, gold's seeing some selling right now. I definitely like to see us come back towards that. What'd you say, 40? Like
I'm looking
40?
around the 4170s demand zone and 4100s flat, right? So we still have very, very beautiful bullish market structure from these lows around 3900.
Okay.
And I'm still looking at this very beautiful bullish market structure here. And I'm looking at some key areas of interest where we've seen more buy orders accumulated before we continue the trend. And I'm looking at two sweet spots around here where we could still see some higher lows getting created and still continue the general bullish trend. Now, mind you, I'm always looking at the markets from the perspective of a day trader, right?
Yep.
Being in a trade for potentially multiple sessions, a couple of days, looking for a 1 to 3 risk versus reward sweet spot where we're on something like gold where the volume and volatility has been very healthy. I can take advantage of a 400 pip move, 600 pip move while sacrificing like 100 pip stop loss. You know what I mean?
Yep.
Yeah. So what are your 2 cents?
I mean, listen, I love the way you're setting things up. I'm the same way. I'd rather not take those breakouts. We don't want to buy highs, sell lows, especially as day traders. And a lot of people get worried when we're at all-time highs, right? Like, oh, we
Yeah,
can't go much higher. But like you said, we're day traders. We're just trading the momentum. We're trading the direction. We're not looking to buy and hold for days on days. So if the market crashes, that's going to be an intraday movement. We're going to be able to get out and maybe get into that.
exactly. So and for me, my bread and butter and the I don't know if a lot of people in the audience may be similar to me. My bread and butter plays as a day trader is always sticking with the main trend. 80% of the time, I like to stick with the main fundamental and technical trend.
Yep.
But because on the intraday time frames, you have these corrections, you have these flush outs. 20% of the time, I want to be skeptical of this. Whether it's seeing that gold is very bullish, but it's reaching a previous supply zone, whether it's expecting that gold may see a retracement with potentially optimistic US data and a little bit of a dollar rebound, I want to have at least 20% of the time a little bit of skepticism. So then when there are these larger flush outs and corrections, I'm not thrown completely off guard. You know what I mean?
Absolutely. No, we don't want to be caught on the wrong side.
Yeah. So right now, when I'm looking at gold and still just keeping it on the chart here, right now I'm expecting one of two things to happen. I don't really want to execute in this range, but usually when there's a secondary phase of market structure, you could either have a corrective phase, a short-term retracement, correction, pullback against the trend, whatever you want to call it, or you could have a consolidation and accumulation phase. And gold could just be ping-ponging in a range, collecting more orders until we see that continued breakout, right? Me, preferably, I do like the pullbacks. I like price digging down to a little bit of a deeper demand zone in range. So then I have very clear entry points and targets. If the universal laws of market structure are continued to be respected, gold is still bullish on central bank buying demand. Gold is still bullish on rate cut bets being priced in. Gold is still bullish on any tensions that may be escalating geopolitically. Then I know if we pull back to this zone where we've seen more buy orders accumulated before, if we do not break, I at least can play with levels that have been tested already. We have the range to at least go from 4180s up to 4250s. And then when I ask myself a question of psychology, is this a trade I would want to repeat 1,000 times over? The answer is yes.
Yeah, every trade should be.
Right? You're retesting structure. You're technically holding a key demand zone, support level, whatever terminology you like to name it. We know it's the same idea, right? Liquidity sweep, whatever you want to call it, right? You're holding that level. The fundamentals have not shifted in structure, and you have a beautiful range to play. You know, if you have a pullback and structure is not shifted, you're at least going to come revisit this higher high again. I know structure hasn't been as, it's actually been pretty clean. It was a little bit messy, obviously, with this correction here, and now it's been pretty clean since then. But it was just textbook from the Jackson Hole Symposium dovish tilt by Powell here. That was in August. This was the type of structure you would want to print in a trading textbook. If you were writing a trading textbook and you want to show higher high and higher low structure, one-sided fundamentals and technicals, this is what you would show on it, right?
That's right. That's right. I'm liking where gold is right now on this pullback. A little bit of the bottom of the range. Pull into that 15-minute or 5 and 15, the overnight range we've had.
Right here, right?
Yeah.
This 42.15, 42.20s level. It does, for me, that is a very nice little support level. It's just, I think this range right here, if we bounce from here and at least have the minimum reaction to go back to this same high, potentially creating a range, this would be a great range for scalpers, or if you're going to be in the trade for maybe an hour or two max. Because the one thing you want to be a little bit careful about for the scalpers and stuff like that is timing through the session. If we're still hovering at the bottom of this range with a few minutes until the New York Stock Exchange open, where there's the increased probability of some wicks being created in liquidity grabs, I would want to be a little bit more careful, right? You know, sometimes with the timing, you could see a great support created here. Going into the New York Stock Exchange open, you end up creating a lower wick like this. It looks like price is going to break lower, and then you snap back above the range and get that beautiful buy you were talking about. Right?
Exactly.
So that is something I like to keep in mind going into timing from a scalper's perspective. When you're coming around New York Stock Exchange open, or you're going into the commodities exchange open through the prime North American trading session, right? Because for them, it's going to be important. You got your New York open at 8, your commodities exchange open 20, 30 minutes after that, and then the New York Stock Exchange open, right? So they need to be a little bit, scalpers, short-term traders need to be a little bit more mindful of these times where you can get larger liquidity grabs. Where for me as a day trader, I'm more focused on how price can move through the entire New York session. Then I'm focused on prices will set up and adjust going into Asian and London. I'm more session by session rather than hour by hour. But I agree with you. It looks like you could just get even into the next 4-hour candle and hourly candle, us just making a lower wick into this area and still just seeing some bulls holding steady here, right?
Absolutely. Absolutely.
And
Great. I did the same thing, the time frame analysis to be able to jump from the hourly, the 15, know when to check those time frames, extremely important. A lot of traders, they end up on the 5-minute, the 1-minute, and they forget to zoom out.
Yeah. And to be honest, I don't see anything wrong with the lower time frames like the 5-minute and 1-minute. But the key difference in getting lost in the noise and distracted and using the lower time frame efficiently is only watching the lower time frame when it's at a day trade or higher time frame area of interest. For example, on market, the pullback level here around 41.80 is also a level I'm personally interested in, right? I still want to play the higher time frame bulls. I still want to play the intraday bulls here, right? But this is a great level for me as a day trader, like we were talking about on the gold chart, to see a retracement, hold price and hold bullish structure, and continue back to these bullish targets. If I'm personally expecting that my playbook and plan is to retest this level, there's no point for me to watch the 1-minute time frame as we go down to there. Because if I do that, I'm going to fool myself into taking a trade early and prematurely. But I do find that you see the fastest confirms of buyers coming in or buyers getting faded out when you watch the lower time frame at your area of interest. So I would stay away from watching the lower time frame here. But as soon as price comes to my pullback level, I'm going to start looking at the 5-minute time frame, the 1-minute time frame, to see if you get those signs of a support being created. So for example, let's look at the gold chart here, right? You can see, for example, here, 4,100 was a nice little area of interest as well previously. I think we were calling out some of these buys. I think you were calling out those buys as well, right? Now you can see it looks very simple now, clean cut after the fact. Everything does in hindsight. But it could be very difficult to get a good entry here if you're waiting for 30-minute candles or hourly candles. By the time you get a rejection candle or a bullish engulfing, price is already up 100 pips from your zone. Yeah. But if you go to look at the 4,100s on the lower time frame here, you can see the difference in confirms, right? You can see that as you're coming down to that key demand zone, you're seeing the sharper rejection, where this is where you want to start watching the lower time frame price action. You don't want to start watching it as it's pulling back. You don't want to watch it as it's away from your area of interest. You want to jump into the lower time frame price action when it is retesting an area of interest you already identified from the higher time frame. So here, for example, I was able to take this buy without needing to wait for 3 hours of candles to close, right? But it takes a lot of experience. It takes time to develop into that.
It does. But with that experience, with that time, it will become almost like second nature. It really does.
The thing is, we all have these chimpanzee monkey brains. All of us do, especially when you get into trading and especially when there's potentially money on the line. And I think psychologically, what triggers that is our brain is always focused on the greed and reward rather than the risk. Right. Our brains are naturally always trying to focus on getting some more dopamine, whether that dopamine is from being right in the market or whether that dopamine is from having a winning trade. And our brain is very rarely focusing on the risks or the potential downside of a situation. So people do not attack the markets realistically because their brain is always focused on dopamine, always looking for a win. They're always in attack mode. Right. They're always on offense. But we know that you have to learn to flow with the market waves. There's certain periods of times you should be on offense, and there's certain periods of times you should be on defense, and you should learn to preserve your capital, right? Right. I don't know about you, but for me, I hate consolidations. If I see gold in a consolidation zone or from trading dollar pairs and it's a consolidation zone, that's a nightmare for me. So I've learned through my trial and error, through losing tons of money in the past in consolidations, that it's always a lot better if there's a consolidation going on for me to either not trade, downsize my risk, or decrease the quantity of trades I'm looking to take. Right. But then in a trending market, something like gold, where you've had these one-sided fundamentals on the intraday and higher time frame, the technical structure is lining up with that. My bread and butter is those pullback buys in the example of gold. And in those situations, I take more trades. I'm more aggressive with my risk as well, right?
Yeah, no, we have to. When we see that market conditions are in our favor, it's funny. When we had the government shutdown the past, 40-something days, I love that price action. The way markets were ranging, I actually do prefer that range of a market because it almost seems a bit more predictable. A lot of people try to take the breakouts when it's a bit more obvious that it's going to be a
ping pong.
Exactly.
So that's what I mean. I'm that idiot that's patiently trying to get the breakout, and then it rejects and comes out. So I've just learned, for me personally, and this is a perfect example. This is a perfect example of how we're all trading the same markets, but our perspective completely changes how we attack it. You perform very well in a consolidation. You find it very clear cut, where I turn into a monkey brain in a consolidation, right? So this is where something like market comes in. It can provide so much clarity. It can provide so much. Positive advantages where you're getting a clear-cut information on what the bias is, what the levels are, and so forth. For example, I'm on the homepage right now. Myself, Nalab, and our cracked engineers on the team, we wanted to design this homepage to be a flow, a process where a trader can go through this and have confidence in a singular bias, right? Or it may be a mixed bias and they know to stay out of the markets or avoid the conditions, right? So I want to get your 2 cents on that. On the revamped market homepage, do you think it does that job? Because that's what we were trying to visualize as we are traders. What would I want to see that would help me build a bias and have confidence on trading an asset class? And we said we want to see what the higher time frame is saying, the intraday technical bias. We would want some key price levels. We would want to understand what can lead to those price levels being retested. I'd want to see live streaming news that can impact my asset class in real time. I'd want to know what fundamentals are really driving price. And I want to see this all in one view. So then when it comes time to execution, a lot of the guesswork, it's been done. A lot of the confusion, it's been cleared. And we can just jump in with full focus on execution and actually take advantage of market moves without having all this hesitation and doubt. So what do you think?
Yeah, no, I think it's great. And I love, like you mentioned, with the what's impacting intraday, how it does divide it to, hey, listen, this 45% is bullish, but this over here, 30%, this is bearish. This is huge for us as a day trader to say, hey, listen, our fundamentals, they aren't consistent right now. Sure, my technicals are leaning bullish, but we just had a major red flag because the government shut down, because he announced a $2,000 stimulus, which would increase the trade deficit, not decrease it. Like, there's so many things that go on in the economy, that go on in the world, that we as people can't really keep track of everything unless we have CNBC over here, we got Fox over here, we got Bloomberg over here.
10 screens open, all news.
Or
and news is stressful. It's not like it's going to be some positive things bringing you peace of mind, right? News is always going to be about trade wars, political disputes, companies going down.
But a lot of it, news-wise, like if you're looking at NBC, you're watching one of these channels, it's all nonsense. It's all fluff. They just talk the talk. Whereas market is like, hey, listen, this headline came out. This is what it means. There is no BS in between.
Yeah. One thing we wanted to focus on when we were delivering information to our end user is we didn't want to give them opinions. There's enough opinions on social media. You could post a gold chart right now, a very vague gold chart on social media, and ask people, what do you think this is, bullish or bearish? And you're going to get 50 people saying bullish, and you're going to get 50 people saying bearish, right? So we wanted to do the best job we can to eliminate confusion, eliminate doubt, and try to obviously minimize uncertainty a little bit, right? Now, obviously, you're never going to completely remove uncertainty in the markets. That's impossible. But we wanted to minimize it the best we can, right? So that's the way we're approaching the design of market, the information we're sharing, and so forth. For example, me personally, I would still love if we can retest into 4180s. Obviously, I understand the fundamentals behind that of what we could see to push price there, right? But that took me years to learn. It took me years to learn that you could see some profit taking, that dollar could start to rebound, or you could have optimistic data and that could drive price down short term. Now, even a new trader who is just getting into fundamentals can come to our dashboard, look at the higher time frame bias, intraday bias, see a pullback level, and not just that, one click of a button, you can see that if we fail to hold this support technically, we can drop a little bit lower. If we have the inflation data get released and it's elevated, that can lead to a hawkish Fed, strengthening dollar and pressuring gold. Like for me, I know I'm the co-founder, but this is just insane. Being in the markets for 10 years, I've never seen something like this, something that's so intuitive, so helpful, so valuable to walk you step by step through what is going on in the asset class, whether you're looking at gold, whether you're looking at Euro USD, whether you're looking at stock markets, right?
Yeah, absolutely. 100%. Guys, listen, if the founder's excited and likes it, right, that speaks a lot about the actual company and the product itself. And that's the goal of market, right? To sum everything up for us, give us that insight without having to be an institutional trader. Gives
Yeah.
you everything you need to know right here. Economic data, fundamentals, anything you think of, the back testing tool, what moved markets,
Yeah.
earnings, Trump tracker. We have anything on the Trump tracker today?
Yeah, so my process, right? What I do when I first get on the charts is I like to look at the general markets on the home view. I want to get a nice macro overview of how markets are moving overall, right?
Okay.
What is it looking like in terms of sentiment and risky assets? Well, we're still seeing cautious optimism. We know that there's a tech to value rotation, volatility's been controlled, the government shutdowns come to an end. So I'd
Yep.
like to flow through this first. I think the general markets view, it gives you a perfect quick glance of overall macro expectations, right? You can see how capital is flowing through the various risky assets and sectors. A quick little recap of news as well. As per what you said about Trump, it's a high risk score
Oh,
today,
oh
right?
man.
Now, I think even though it's a high risk score, he's going to be really propping. If there's any headlines from him, it's going to be him looking like a hero. How he came to
Oh
save the
yeah.
day to end the U.S. government shutdown.
Always.
Right?
Always. The
Trump,
Democrats did it.
Trump is a master. When if you understand his psychology, it's so great to trade. Trump is a master of making a problem seem much worse than it is, extending that problem, and then him coming in being the hero that saved the day.
Yeah, he lights the fire and then puts it out, man. Then
Right?
he's a
It's a
firefighter.
great tactic. He'll come in and say, you know what? China's done. I'm done with China. He'll make the problem.
Yeah,
I'm
out
done
of
with
nowhere.
China. Baron Trump shorts Bitcoin from the highs right before he says he's gonna be done with China. Right?
Yep,
Next
yep.
day, he tells his son, "All right, I'm gonna tell him I love President Xi. President Xi is my best friend. We're going golfing together next week. Our wives are gonna make dinner for us together next week, and we're gonna have some great tariff deals." Like we've seen
Nice.
it live happen over and over again, even with the geopolitical tensions in the Middle East. Even Trump, I know this was very quick, but remember, like a few months ago, there was the potential of India, Pakistan geopolitical tensions escalating, and they were
Yep.
butting heads a little bit. Trump was the one that came in and said, "Nah, they're not fighting anymore. I fixed that. I announced a ceasefire between them." Right. So that's just Trump's psychology. He always wants to have the visual image in the public eye as the hero, as the savior, as the
Yeah.
guy that came and fixed the problem. Right.
We'll see how that plays out when everybody's health insurance skyrockets by like 4 times.
Yeah. Crazy times, crazy times.
For sure.
But sorry, another. So then, anyways, after I look at the general markets, I'm anticipating what Trumpy can be saying. I'm looking at the general sentiment. Then I come into more of the curated analysis to the asset classes that I've onboarded with. Me personally, I'm a big gold trader. I'm a big dollar pair trader, and I'm a big stock market trader. Right. So gold's my bread and butter. For me, honestly, the position you're talking about looks really nice. In the next 4 hour candle
Yeah.
for a quick scalp, like which is just in 2 minutes now, the 4 hour and 1 hour candle of most brokers. If we're not even breaking this support and these previous highs to the left, I think for the scalpers, you could easily just see a partial wick fill here. And the next hourly and 4 hour candle still at least continue up to the same range. If the momentum's still there, it could even break out higher.
Yeah, absolutely. Well, that's why I liked this area, because even though it wasn't the 4210 that we were looking at, it was a bit higher up, holding us in a higher scale range. And knowing the momentum that we had, if we are going to follow through with that, a lot of times we'll come to that first range and hold instead of that second range.
Instead of that deeper range you want, right?
Exactly.
You're waiting for that deep. I'm still gonna wait for the deeper range. I'm not gonna execute here just because the one good thing about the area you're talking about is that at least we're not in price discovery mode. We're not going in. If we push up from here, we're not going into the unknown like we were to the left here, right? At
Yep.
least we're going to come retest some of these price points of interest to the left. Looks like we can come into these wicks here, into the deeper 4250s. After that, we're going back into the 4300s and up, right? But for me
Absolutely.
personally, I love this structure that's starting to develop here. And I'd love to see, even if we continue a bit higher here, a little bit of a range being created like this. This would be, obviously that'd be picture perfect, but you know what I mean? I would love
Screenshot
to
that. Clip that.
yeah, right. I would love to see something like this, and it would still line up very well going into market with our higher time frame bias.
Yep.
Market can literally see us if we're holding above the 4,050s on the higher time frame for these fundamental reasons that we could go right back into the highs again, the all-time highs. So
Right.
obviously, I want to take it level by level. With what you're talking about, if we don't get the pullback to 4180 and we're still holding this lower time frame support zone here, it looks like we could easily still sweep up into the 42.55s, right? We could easily
Yeah.
just see something like this coming in. This is still a very favorable range for intraday traders, for scalpers. Can't go wrong with that, right?
Yep.
Now,
Absolutely.
the one thing I'm being a little bit cautious about is it doesn't look like the CPI data is going to get released like in the
Yeah.
time that we wanted. But it said that the data release is going to be slightly delayed. I don't know if that means delayed by a couple of hours or if it means delayed by some days or weeks. So that's
Yeah.
something we need to look out for. If they just randomly release that and it ends up like doing some heavy liquidity grabs, sweeping people's orders out, right?
Yep.
But yeah, for me on gold, I'm still primarily bullish. I'm going to, even though there's a great setup here for this range, I'm personally going to wait for a bit of a deeper flush out, retest into the same demand zone. And I want to play this range here. And I think that's a very favorable day trading position. I can easily get a 1 to 3 RR. For me, psychologically, I always like to focus on a 1 to 3 RR or more because it allows me to have at least a 50% win rate and still be very successful in terms of a stretch of 100 trades or a stretch of 1,000 trades, right? Because one of my weak points was always trying to chase a win streak or have a 90% win rate or make a certain amount of money by a certain period of time. And that pressure to perform is going to crush most retail traders compared to just flowing with what the market gives to you, right?
Yeah. Absolutely. Absolutely. Go roll with the market, not against it. We want to trend is our friend is a silly saying, but it's a real saying.
It's a real saying. It's a real saying. So when we're looking at gold here, we have the New York Stock Exchange open to get some more volume and volatility. Let's keep an eye on these levels. Let's keep an eye on with the chat here as well.
Karen, for your information, this is my show and Jeev is the guest.
What happened?
Karen over here saying that, or Karan, my apologies. Jev is the GOAT, hasn't let his guest say a word.
No, I'm the guest. Yeah, I'm the guest. Yeah. That's why I got to speak. You know what I mean?
And then Mondays,
No, sorry about that, Kevin. I didn't mean to.
No, bro, you're chilling, man. I think we're cool. I think this is a great show. A lot of viewers in here. Guys, make sure you hit that like button for Jeev. He's dropping some great gems for us. Good market analysis, and of course, the best fundamentals.
Thank you, man. I appreciate that. But so from our perspective as day traders, as scalpers, intraday traders, we're mainly going to be looking at these three price levels. We could even put one a little bit higher, going right into the next major area of interest I look at on the left is into this wick here.
Yep.
But right now, I'm still loving the beautiful bullish market structure. I do want to see with this new 4-hour candle, if we just end up with this downside active bearish move, if it just ends up being a wick, and by the end of the hourly candle, it flips bullish to go back up into the same range high. This is still a very valid setup. We're jumping into the lower time frame.
Yep. Yeah, look at that. We're trying to make a break of this area of support right now. Hopefully we can get some selling pressure to bring us down there.
If it sees something like this, I wouldn't mind seeing some nice buys in the lower time frame back to the range, but I am going to be careful where I think even lining up with what I was talking about originally and even lining up with market, with the NYSE volume, which usually leads to a higher probability of liquidity grabs and price sweeps, I'm still keeping an eye on this demand zone right here, right?
Yep.
We can see from this price, we had a beautiful bullish accumulation that led to this higher high being printed. The main demand zones I'm seeing are here. After that is down here, really, right? So I'm mainly looking at these levels to keep an eye on. For the scalpers, something like this is nothing wrong with it at all. You could easily get from the 42.15s to 42.20s a bounce of 100 pips, 200 pips. But I think for the patient day traders that may want to hold a gold setup for a couple of sessions, seeing a short-term break below wouldn't be something I'd be against, because it would give us fantastic risk versus reward for a huge range to play, where you could get 600 pips, and with the invalidation of this setup, you could risk 150 pips, 100 pips, and have a huge range to play here, right? This would be textbook perfect. Where on the minimum you can get like a 1 to 5. Even if you want to decrease your risk a little bit, expand the stop loss so your trade has some more room to breathe, understanding how those China market hours go later on, where they just want to wick your entry out and then snap back and play after again, right?
Yep.
I'm really keeping an eye on something like this. And something I love to look at, especially on gold positioning through the New York session, is intramarket correlations. Mainly, what's dollar doing right now, right? So dollar's a little bit softer here on the intraday time frames, but if dollar starts to snap back, if dollar doesn't print any new lows and snaps back above this previous low, just like how it's sort of been quite choppy, a little bit of a consolidation, right? Nothing really clear or decisive. If dollar short term snaps back above here, that can give us an indication that gold may see a little bit of a deeper flush out, more profit taking from these fresh highs for a retracement into this demand zone before we get that sweep, more buy orders collected, and continue higher, right?
Yep. Awesome, man. Guys, great stuff. Make sure you hit that like and subscribe for sure for these shows, because Thursdays, hopefully, Jeev, it's up to you if you want to come on every Thursday.
Yeah, if the chat likes it, if the audience members find value in the information we're sharing, I have no problem coming back, talking about the fundamentals, the technicals, the psychology, right?
Awesome, bro. Cool. Good stuff. So, guys, that's going to be the wrap for today's Market in the Morning show. I hope you guys enjoyed it. Definitely make sure you hit that like and subscribe, and drop a comment if you want Jeev back here on Thursdays. Sort of building out a program for you guys. So, Tuesdays, we're going to bring on our co-founder, Nalab. Thursdays, we bring on the one and only Jeev, Capital Hungry. Maybe we'll break it down even further Mondays, Wednesdays, and Fridays as well. So, I hope you guys all enjoyed the show, and that's a wrap.
Thank you, man. Thank you for having me. I really appreciate it.
Bro, absolutely.